You are witnessing the start of one of the most exciting and momentous transitions in history. An unstoppable movement that's changing the banking and financial world on an unprecedented scale. The catalyst for this global movement is Bitcoin, and it's giving people around the world new possibilities for financial freedom.
The mission, as we've established it, is to explore the bigger world of cryptocurrency as a vehicle to create greater wealth. What a portfolio is a grouping of financial assets such as stocks, bonds, cash equivalents, as well as their counterparts like mutual funds, exchange traded securities like real estate investment trusts and such. And they're usually held at an investment company or directly by the investor, depends on what people are comfortable with. And I believe that the Coin Billionaire Club, our community, will attract a wide variety of individuals from varying backgrounds all around the world, but will gain attention because there are members who want to build an MLM network in the cryptocurrency world, as well as members who strictly want to invest in cryptocurrency. And last but not least, members who want to learn about trading cryptocurrency. So let's talk a little bit about the traditional portfolio. What you see here are two examples, and while there are so many different, I chose to use two ends of the spectrum: the conservative portfolio on the right and the aggressive portfolio on the left. And this is traditional, as most advisors would talk about it. You'll see on the right, the conservative portfolio has 70 to 75% in fixed income securities, such as bonds and other type of income producing securities that are relatively low risk. 5 to 10% might be in cash, or say like a savings account or a checking account or something that's easily accessible, a credit union. And then maybe 15 to 20% would be in equities. And the equities are designed to give a higher than average performance above the stipulated fixed income security and versus the virtually no appreciation that comes from the cash equivalents. On the other side, you see the aggressive portfolio, which moves 65 to 70% into equities, looking for higher growth, and only 20 to 25% into fixed income. So they basically flip-flopped those two and kept the cash to a virtual, limited amount. The next generation would be basically the same cash, equity, fixed income, but now adding crypto. And as you see, the larger piece of the pie is in crypto. But within the crypto arena, you have your moderate, your conservative, your moderate, and your aggressive positions, even within the crypto arena. So within that asset category, there is the moderate, the conservative, the moderate, and the high yield, so that depending on what a person wants. From the investments side, and these are my long-term holds. I'm not trading. I'm not buying and selling. I'm pretty much accumulating on the left. But on the right-hand side, I'm taking advantage of the ups and the downs, the highs and the lows in the market. And in a moment, you'll see that what really makes trading so beneficial, and people don't understand how yields and values are created by companies like WCX, the WCX coin and WCI, and various others that are focused on trading, is because the high volatility of a coin like Bitcoin allows for people to buy low and sell high and do it multiple times a day. Reason that number 1, number 2, and number 3 exist is so that the creation of more Bitcoin is there. Number 4 and number 5, Ethereum and Litecoin, are there because they're very well represented names, very high in the market and in reputation and trading. I believe the most undervalued is PCS. Why? Because nobody knows about it. It's a one-year-old coin that's already done over 100 million in market cap. So it's no sleeper but most people don't know about it. Now, when you look at the trading side, you'll see I've mentioned here Bitcoin, Ripple, Dogecoin, Steam, and Dash. Those are 5 that I've listed in my portfolio, but let me take an opportunity to show you what the trading platform would look like. Now, obviously, most people see this if they have a Bitcoin account, a wallet like Coinbase. You'll see these trading graphs. But when you see this particular coin, Ripple, which is XRP, you'll see this is on a 24-hour basis. So you see all this movement that's going on here is on a 24-hour basis. So what it represents is a high degree of volatility. And that's good. See, a lot of people think volatility is something scary, but if you're a trader, volatility is a good thing, because what I would say the average trader or your very strategic trader will be looking at these movements and be looking to buy low, as you see down here, buy low and sell high as it moves, and capitalize on multiple trades per day, looking to yield at least 1% appreciation in their portfolio based on the trades. So they may buy and sell anywhere from 5 to 6 times per day, looking strictly to achieve a 1% yield. Now, that doesn't mean that, like me, I happen to be holding Ripple. I don't buy and sell as much because I believe it's a long-term hold, but I can buy and sell it on a daily basis if I so choose. You'll see on the right side within this segment called markets, all of the different movements. Obviously, the green are the gainers and the red are the losers. But you can actually watch from a trading standpoint how profits are created very rapidly because of these movements. Now, please let me, while I'm emphasizing profits, there's also losses that can come, as you can see in the red. Because if you're on the wrong side of a trade and you haven't shorted the trade, you could lose money. But most seasoned and strategic traders are not looking for the big kill. And while it doesn't zoom in, you'll see that there are some that have 26%. There are some that are in the 20s. But a strategic trader isn't looking for the big bear kill, because typically what happens is on a day where there's a 25 to 26% upside, tomorrow there'll be a sell-off and there may be a 25 to 30% downside. Okay, so that's one example of a trading platform. And here's another example of trading positions in my account. So you see that Ripple is here, and Ripple has been highly profitable these last few days, last week, I should say. Ethereum is here, New Economy Movement is here, Lumen, Litecoin, and Bitcoin. They're all in there because that's what, as of this snapshot, I was trading. The total market cap of the cryptocurrencies now have reached well over 60 billion as these assets continue to draw a significant inflow. One thing they note is that the growing awareness has created an influx. An influx when you have to think about only about 5 million people in the world even are familiar and aware of these type of investments and now beginning to participate. And that's 5 million out of 7 billion people in the world. So you realize that, you know, when you think about the potential, where do we go next? Just getting started.